Hello traders, you are welcome to this video and I especially welcome you back to the Forex Geek channel. In this video, we will look at the 4-time frame stochastic indicator, alright? The 4-time frame stochastic indicator is a custom indicator that calculates the stochastic values for a current chart time frame, okay? And the next three higher time frames, okay, and it plots them as a line to provide clear bullish and bearish trading signals. Okay, so I'm just going to be adding the 4-time frame stochastic indicator to the chart, and we can see this is how the indicator looks like. All right, so basically this indicator is quite a straightforward indicator. Okay, what this indicator does is that it leverages on the concept of the traditional stochastic oscillator, right? But this indicator does not exactly display overbought levels and oversold levels, all right? But it attempts to show traders possible situations, right, when there is an overbought market or when there is an oversold market. Okay, how do you know that, or how do you identify that? Basically, for the fact that this indicator leverages the concept of stochastic, right? Whenever you have consistent pink dots, right, it shows that there is bearish momentum in the market. Okay, the appearance of consistent pink dots shows that there is bearish momentum in the market. Then at the site of the first green dot, as we can see, when the first green dot formed, we that this is for the 1 week time frame. So let us just let us discuss that of the 1 hour time frame, since we are currently on the 1 hour time frame, right? So when the first green dot formed, as you can see, this showed that there is already an oversold condition. The forming or the formation of the first green dot shows that there is oversold condition already, and we could have a bullish reversal. And you can see that shortly afterwards we actually had a bullish reversal. So if you were looking for precise entry points, then at the formation of that green dot, it would have been a good time to enter a buy trade. And after entering a buy trade, a good place to set your stop loss would be below the swing low, right? You can use support and resistance zones to identify clearly those reversal points, and we can see that setting your stop loss below this support zone, some pips below it, is going to be an ideal place, right? So long as you have a good risk to reward ratio, you can set your take profit at the very next resistance zone, all right? Or you can decide to wait for an opposing signal. For example, you can decide to wait for a red dot, a pink dot to form. And remember, any time frame that you are trading on, if you entered a buy position on a 1 hour time frame, make sure that you find your exit on that 1 hour time frame. All right, do not enter a buy trade on the 1 hour time frame and you are looking for sell signals on another time frame or exit signals on another time frame. Okay, so as we had already entered a buy on this time frame, the 1 hour time frame, we should be looking at the formation of a pink dot on that same 1 hour time frame, not the 4 hours, not the 1 day, not the 1 week, and not smaller time frames, right? So at the formation of this pink dot, it would have been a good time to exit our buy trade. Now, one thing for you to know is that this strategy, or rather this indicator, can be really beneficial for traders who make use of multi-time frame analysis approach, right? So if you are a kind of trader that tries to analyze at different time frames before entering a position, then you're going to find this indicator really, really beneficial, because at a glance you don't need to be switching across the time frames, right? At a glance you will know what is happening across 4 consecutive time frames. So if you are on the 30 minutes time frame, and let's say you are a day trader, right? Perhaps you basically, or you mostly use a 15 minutes and 30 minutes time frame to trade. Let's say maybe 1 hour in some cases. Then you might want to go to a smaller time frame so that the indicator can capture the 4 time frames that you mostly used for your strategy. So if you are a day trader, perhaps you can go to the 5 minutes and you're going to get insights across the 5 minutes, 15 minutes, 30 minutes, and 1 hour chart, because you're going to see here the 1 hour is currently experiencing bearish pressure, the 30 minutes is currently experiencing bearish pressure, the 15 minutes is currently experiencing bearish pressure. So it's just the 5 minutes that is currently experiencing bullish pressure. In that case, it is ideal to look for sell opportunities, because most of the times the smaller time frames respect the higher time frames. So eventually this 5 minutes might turn back to bearish pressure, right? It might eventually display a pink dot, right? So if you go to higher time frames, when using this indicator, I'm gonna recommend a top-down analysis method, right? You start from a higher time frame. Even if you are a day trader, at least you would want to know what is happening on the higher time frames, right? So if you are a day trader or a swing trader, if you are a swing trader, even if you focus on the daily time frame, you can decide to start your analysis from the weekly, right? So that you can get a general view of what is happening in the market. So if you are a day trader, you can decide to start your analysis from the 4 hour or the daily, for example. And then after you have seen what is happening on the daily chart and you've seen that this indicator says there is bullish momentum in the market, there is bullish momentum in the market. So if you want to trade in the direction of the overall trend, then you would actually focus on looking for buy trades, right? You will focus on looking for buy opportunities. But if there is no buy opportunity showing up in the market, then you can either decide not to enter any position at all to be on the safer side, or you can decide to trade against the trend, with more caution, right? You can decide to trade against the trend. After all, if you are a day trader or a scalper, you can decide to trade against the trend. Within the day, you look for good opportunities and all of that. So having said that, if you want to look for a sell opportunity, despite the daily time frame saying that we have buy momentum, you should look for bearish candlestick patterns, perhaps around resistance zones, right? It is better if you find your bearish candlestick patterns around resistance zones. When you find any, you can go ahead and enter your sell, because that's going to be a confirmation, right? Set your stop loss above the swing high, and for your take profit, you can actually decide to use support zones, or you can decide to use other indicators for your confirmation. For example, if I want to use the moving average, you can actually use any indicator of your choice, right? But if I want to use moving average, for example, let's say I'm already in a buy trade and I'm looking for an exit point, I can use resistance zones, or you can decide to wait for the price to drop below the moving average, and that's going to be my exit strategy. Okay, or you can decide to wait for an opposing signal to form on the 4-time stochastic indicator. Okay, the same time frame that you entered a trade, use that same time frame to exit your trade. All right, so that is it for this video. I hope you found this video insightful. Kindly like and subscribe for more trading insights, and don't forget to hit the notification bell so that you do not miss out on more trading videos like this. In the meantime, thank you for watching, and I hope to see you in the next video. I wish you a very happy trading.